Ever wondered how some people seem to have a magic touch with money? Today we're diving deep into the mind of one of the greatest investors of all time, Warren Buffett. We're going to unpack the timeless wisdom behind his most powerful quotes, lessons that have guided him to build a colossal fortune and can absolutely transform your own financial mindset. This isn't just about stocks and numbers. It's about a philosophy for wealth, patience, and success. So, grab a notebook, because you're going to want to write these down. Let's get started. Let's kick things off with perhaps his most famous piece of advice. Rule No. 1. Never lose money. Rule No. 2. Never forget Rule No. 1. This might sound simple, but it's profound. It's not about avoiding every single dip in the market. That's impossible. It's about prioritizing the preservation of your capital. Before you chase a huge gain, your first thought should be, what's the risk of permanent loss here? This defensive mindset is the bedrock of his entire strategy. It forces you to be disciplined, to do your homework, and to avoid reckless speculation. It's about playing the long game, not gambling for a quick win. Think of your money as your employee. You wouldn't want to send it into a dangerous situation where it might not come back. Next up, a quote that perfectly complements the first one. Price is what you pay. Value is what you get. This is the core of value investing. So many people get caught up in the price of a stock. Is it going up? Is it going down? They trade based on noise. Buffett teaches us to look past the price tag and understand the intrinsic value of the business itself. Are you buying a piece of a wonderful company with strong fundamentals, a competitive advantage, and great leadership, but at a fair or even discounted price? If the market price is significantly lower than the true value of the business, you've found a bargain. The goal is to buy $1 worth of assets for 50 cents. Always focus on the what you get part of the equation, and you'll stop chasing trends and start making sound investments. How do you find these wonderful companies? Buffett gives us a clue with this quote. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. This is a crucial evolution in his thinking, influenced by his partner Charlie Munger. Early in his career, Buffett was more focused on buying mediocre businesses at rock-bottom prices, the cigar butt approach, but he learned that it's much more profitable and far less stressful to own high-quality businesses that can consistently grow their earnings over time. A great business will keep compounding your wealth for years, even if you pay a reasonable price for it. A mediocre business, even if bought cheaply, will often give you mediocre results and endless headaches. Quality trumps cheapness in the long run. Now, let's talk about patience. In our world of instant gratification, this next quote is more important than ever. The stock market is a device for transferring money from the impatient to the patient. Think about that. Every time you see a market panic, who is selling? The impatient. They're driven by fear and the need for immediate action. And who is buying? The patient. They see fear as an opportunity to buy those wonderful companies at even fairer prices. True wealth isn't built overnight. It's built by making smart decisions and then having the discipline to wait. Buffett himself has held some stocks for decades. He plants a tree and doesn't dig it up every week to see if the roots are growing. He lets it compound. Investing is a marathon, not a sprint. If you can master your emotions and develop patience, you're already ahead of 90% of the market. So how do you stay patient when everyone else is panicking? Buffett advises, we simply attempt to be fearful when others are greedy and to be greedy only when others are fearful. This is the ultimate contrarian mantra. It's easy to say but incredibly hard to do. When the market is soaring and everyone is bragging about their gains, that's the time for caution. That's when fear is your friend. But when the market crashes, when headlines are screaming sell, and when your friends are getting out of stocks, that's your signal. That's the moment of maximum opportunity. It takes courage to buy when there's blood in the streets, but that's precisely when the best bargains are found. This single piece of advice, if followed consistently, can be the difference between average returns and extraordinary wealth. But you can't be greedy about just anything. You need a framework. That's where this next quote comes in. Never invest in a business you cannot understand. Buffett calls this your circle of competence. He famously avoided tech stocks for years during the dot-com bubble because he admitted he didn't understand their business models or how they would be profitable in the long run. He stuck to what he knew: insurance, consumer goods, railroads. Your circle doesn't have to be huge, but you need to know its boundaries. Are you an expert in healthcare, retail, energy? Invest there. If you can't explain what a company does and how it makes money to a 10-year-old in a few sentences, you probably shouldn't own its stock. Stay within your circle and you dramatically reduce your risk of making a big mistake. This leads us to another gem about long-term thinking. Our favorite holding period is forever. Now, he doesn't literally mean you should never sell. Circumstances change, but the mindset is key. When you buy a stock, you shouldn't be thinking about selling it next week or next year. You should be thinking like a business owner. Ask yourself, is this a business I would be happy to own outright for the next 10, 20, or 30 years? This perspective forces you to focus on the long-term viability and competitive strength of the business, rather than short-term market fluctuations. It filters out all the noise and helps you identify truly durable, compounding machines. If you're not willing to own a stock for 10 years, you shouldn't even think about owning it for 10 minutes. Let's talk about time and compounding. Someone's sitting in the shade today because someone planted a tree a long time ago. This beautiful metaphor captures the essence of long-term investing. The financial security and wealth you will enjoy in the future depend entirely on the seeds you plant today. Every dollar you invest is a seed. With time and the magic of compounding, that seed can grow into a mighty tree that provides shade or financial freedom for you and your family. It's a powerful reminder that the best time to start investing was yesterday. The second best time is right now. Don't wait for the perfect moment. Start planting those seeds no matter how small, and let time do the heavy lifting for you. Of course, a big part of investing is about managing yourself. Buffett once said, "The most important quality for an investor is temperament, not intellect." You don't need to be a rocket scientist to be a successful investor. You don't need complex algorithms or a PhD in finance. What you need is emotional stability. You need the ability to think independently and not get swept up by the crowd's emotions, whether it's euphoria or despair. Can you stick to your plan when the market is volatile? Can you resist the temptation to follow a hot tip from a friend? Your behavior, your temperament, will ultimately have a far greater impact on your investment returns than the raw power of your intellect. Master your emotions, and you'll master the market. To wrap it all up, here's a quote that ties everything together with a dose of humility and practicality. Risk comes from not knowing what you're redoing. Every single piece of advice we've discussed today is in standing the business, staying in your circle of competence, focusing on value. Being patient is designed to reduce this risk. When you gamble on something you don't understand, you're taking a huge risk. But when you invest in a wonderful business that you've thoroughly researched, at a sensible price, and with a long-term mindset, the risk is minimized. True investment success isn't about taking wild risks. It's about systematically eliminating them through knowledge and discipline. So there you have it, a distillation of decades of wisdom from the Oracle of Omaha himself. These aren't just clever sayings. They are a complete blueprint for building wealth and achieving financial independence. It's about being a business analyst, not a market timer. It's about patience, discipline, and controlling your emotions. It's simple, but it's not easy. The real challenge is putting these principles into practice and sticking with them, through good times and bad. I hope these insights have been as valuable for you as they have been for me. If you found this helpful, do me a favor and hit that like button. It really helps the channel grow. And for more content designed to help you master your money and mindset, make sure to subscribe and turn on notifications so you don't miss a thing. Thanks for watching, and I'll see you in the next video.